Good afternoon. My name is Ed Bernard, and I serve as chair of the Financial Accounting Foundation. I'd like to welcome our stakeholders to tuning into this virtual meeting. Today's meeting will include reports from the FASB Chair, the GASB Chair, the FAF Executive Director, and we'll also receive a report from the Financial Accounting Standards Advisory Council, as well as a report from the Trustees Standard Setting Process Oversight Committee. Before we get to those reports, I'd like to say thank you to the FAF Board of Trustees, along with the executive leadership and staff of the FASB, GASB, and FAF for their dedication to our mission and their support throughout my tenure as chair. As we announced earlier in the year, I'll step down as FAF chair on December 31st. I'm pleased to announce that the FAF trustees have selected Dahlia Blass to serve as the next chair of the FAF for a 3-year term beginning January 1st, 2026. Dahlia is the senior investment management partner at the law firm Sullivan & Cromwell, where she leads the investment management practice, providing strategic and regulatory advice to asset managers, funds, fund boards, and service providers on a range of regulatory, governance, compliance, examination, and enforcement matters. I'm sure the board and staff will continue to build upon their tremendous efforts on behalf of our stakeholders and will welcome Dahlia into her role in January. I'm also happy to announce that the FAF trustees have selected the successor for John Auchincloth, the executive director of FAF, who served in that role since 2020. Beginning October 1st, Erin Hill will join the FAF as the new executive director, and we welcome her to this organization. Erin is a corporate executive with more than 30 years' experience on Wall Street. Most recently, Erin served as the chief administrative officer at BNY Mellon. And prior to BNY Mellon, Erin served as the head of consumer banking and wealth management at JP Morgan Chase, leading more than 50,000 bankers and financial advisors. John has kindly agreed to remain with the organization through a brief transition period before his formal retirement on December 31st. We'll take time at our next meeting in November to thank John for his leadership and accomplishments during his eventful tenure. Finally, I have the pleasure to announce 2 board reappointments that were approved earlier today by the trustees. The first is Fred Cannon, who's been reappointed to a second term on the FASB. Fred joined the FASB in July of 2021, and his service will conclude on June 30th of 2031. Fred previously served as Executive Vice President, Global Director of Research for Keefe, Bruyette & Woods, a Stifel company, where he was responsible for global equity research and served as a member of the board of directors of the KBW broker-dealer. Throughout his career, he's been a regular guest on CNBC and Bloomberg Television, as well as other national outlets. An accomplished economist and financial analyst, Fred is well-versed in areas such as equity strategy, investor relations, and corporate communications. My second reappointment announcement is for Jacqueline Rett, who serves on the GASB. Jackie began her GASB service in July of 2022 and will continue to serve through June 30th of 2032. She's the Robert Keith Professor in the Lynn Pippinger School of Accountancy at the University of South Florida. Concurrently with the start of her first term at GASB, she stepped down after serving 10 years from her role as the Associate Dean for Financial Management and Academic Affairs for the Muma College of Business. In addition to teaching financial and government and not-for-profit accounting, she's focused her research on governmental accounting and auditing, accounting information systems, and the reporting and use of financial information. In 2020, the American Accounting Association's Government and Nonprofit section recognized Jackie with the Enduring Lifetime Contribution Award. I congratulate both Fred and Jackie on their reappointments. Now let's move to our regular agenda. The first item of business is to approve the minutes for the board's May 21st meeting. Could I have a motion from a trustee, please?
So moved.
Second?
Second.
All in favor?
Aye.
Aye.
Thank you. So now we'll move on to our reports from FASB, FASAC, and GASB. So Rich Jones at FASB, would you kick us off?
Great. Thanks, Ed. And Ed, it sounds like I'll get a chance to say goodbye to both you and John at our next meeting, but I do want to thank both of you it's been a pleasure to work with both of you over the last several years, and you'll be missed. do look forward to welcoming Erin and Dahlia on board, but I will save a little more formal goodbye to our next trustee meeting.
Sounds good. Thank you.
And if I could refer the trustees, you'll find a copy of the second quarter chair report in your materials. I did want to spend a few minutes to update you on our 2025 activity. During the second quarter, the FASB issued final standards related to share-based consideration payable to a customer and determining the acquirer in the acquisition of a VIE. We've also issued an exposure draft related to accounting for debt exchanges. The board also added a new project to our agenda this quarter on accounting for paid-in-kind dividends on preferred stock and completed initial deliberations and are in the process of preparing an exposure draft to solicit stakeholder input. In addition, up through today's meeting, the board has completed redeliberations and voted to issue final ASUs later this year on our projects on accounting for and disclosure of software costs, accounting for environmental credit programs, accounting for government grants, codification improvements, which has 34 individual accounting items included therein, interim reporting, hedge accounting improvements, derivative scope refinements, and finally, the accounting for purchased financial assets. When you look at our technical agenda today, an agenda that we've discussed has been comprehensively reset as part of our last agenda outreach. You will notice that of the 11 projects on our technical agenda, 8 have been voted to proceed to final standards. 1 is in redeliberations, 1 is working towards an exposure draft, and 1 is in initial deliberations. As I've noted in previous meetings, including yesterday's Oversight Committee meeting, it is reasonable to assume that we will complete substantially all the projects on our current technical agenda by or about the end of this year. We continue to perform outreach with our stakeholders as we consider adding new topics to our agenda. We are continuing to use our research agenda to gather additional input for our board as it relates to future projects. This includes bringing feedback on our 2025 agenda outreach ITC, for which we received almost 100 comment letter responses, as well as responses to our financial KPI and accounting for intangible invitations to comments back to our board later this year. The EITF and the Private Company Council, as well as our normal receipt of agenda requests, will also continue to provide the board items to consider adding to our technical agenda. We look forward to the input from our stakeholders as we prioritize our future standard setting efforts. We are also continuing to work on the post-implementation reviews related to lease accounting and the current expected credit losses standard, and we have a roundtable scheduled for September of this year on the leases post-implementation review. On behalf of my colleagues on the board, I want to thank you for your continued support as we work through and fulfill our mission, and I look forward to taking any of your questions. Ed?
Questions for Rich? Rick?
Thanks, Ed. Hey, Rich, as you just mentioned, you guys are completing a whole host of projects, and congratulations for that. And yet, you got the agenda consultation out there and recently closed, and you have all these suggestions. From a staff standpoint, because I understand how involved the staff gets in a particular project and how much of a deep dive they do and getting all the information to you. What's your sense, the general sense of staff's perspective when they complete a project? Is it one of sadness because they've owned a project for such a long time and it's really their project? Or is it excitement because they're ready to start something new? What's your sense of that?
Hey, Rick, and thanks for pointing out our staff, because we couldn't do any of our standard setting without them, right? They do a tremendous job. They do outreach with stakeholders. They provide our board with an unbiased view as to what issues are being raised and how we should consider them. And my guess is there's a few mixed emotions there, but I would say the number one would be that the pride of accomplishment, that they gave the board all the information the board needed to make a decision on a project. The board's made the decision on the project, and they get to try something new, right? And so I think it's terrific. And don't be misled, while we're moving these projects off, our staff is already working on all of that input and doing deep research to bring items to our board so that our board can make timely decisions on what we add and directions we go on future projects.
Thanks.
Thanks. Manju?
Thank you, Ed. Rich, I understand that you and some of your colleagues recently met with the Korean and Japanese standard setters. And you also have a meeting coming up at the IASB sometimes in the recent future. So can you share a little bit about these meetings and what their purpose is?
Sure. Thanks, Manju. Great question. You are correct. We meet with international standard setters, either country-based standard setters or the IASB. And part of the reason that we do it and part of the reason that they do it is we all recognize that we participate in global markets. It's not unusual that there may be an emerging issue or emerging transaction that shows up in one part of the world before migrating to the other parts of the world. In addition, many of the accounting issues that we're dealing with, we have shared views or shared experiences that it's helpful to understand what approach different standards took to different issues. Particularly when it comes to the IASB, we also recognize as an important part of our cost-benefit analysis here at the FASB, understanding whether we are converging or diverging in our solutions and why is an important part of that analysis. And that continued dialogue and sharing of information with the IASB is very helpful in that regard. I will tell you, our friends in Japan and Korea, we meet with them on a recurring basis. They have well thought out positions. They've looked at issues. They share them with us, and we can provide them some insights into what we're doing here in the U.S. So it's just a general sharing of knowledge that I and my fellow board members find very beneficial.
Thank you, Rich.
Thanks. Any other questions for Rich? Great. Well, thanks, Rich. And with that, we'll turn to Mike Morrow for a report of the FASAC Chair.
Thanks, Ed, and good day, everyone. My report can be found in item 11 of your materials. That report includes activities for the second quarter, as a report for the first quarter was provided earlier this year. I will also highlight some of the activities that occurred in the first half of this year, as well as plans for our upcoming meeting. Starting with the March FASAC meeting, which was held in person, primarily focused on two topics. First topic was on post-implementation review leases, included the history and development of the leases standard. Council members provided observations on the board's activities and certain aspects of applying the leases standard. Second topic in March was on the consistency in accounting standards. Council members discussed how the board should factor consistency of accounting standards into its consideration of potential amendments to GAAP. Discussion focused on inconsistencies with the definition of public business entities, industry-specific guidance, and different accounting models as examples of such inconsistency to be considered. Next, in the June meeting, which was held in person, primarily focused on three topics. First topic was on private credit and debt disclosures. During that session, council members discussed the current disclosure requirements in GAAP for private credit borrowers and lenders, and whether financial statements provide adequate information for investors. For private credit and debt disclosures for borrowers, council members observed that there is not a pervasive need for modification or changes to current disclosures in GAAP, noted that private credit lenders often receive more information from a borrower than is required, and highlighted the different types of borrowers and information needs in the private credit market. For private credit lender accounting and disclosures, council members provided observations about disclosures for the board's consideration, noted the fair value of assets and private credit funds may not provide significant decision-useful information, highlighted that investors are more interested in monitoring the risk of a portfolio than the fund's changes in fair market value measurements. Lastly, council members made other comments about the growing prevalence of private credit. The second topic was on accounting for business combinations. Overall, council members indicated that the guidance for business combinations is difficult to apply sometimes, noted that stakeholders find it challenging to understand why there are different accounting incomes for transactions they view as economically similar, and investors expressed their interest in understanding what was acquired, how much an entity paid, and how the acquired entity performed subsequent to acquisition. Council members identified potential improvements to the accounting for business combinations and asset acquisitions for the board's consideration. Last week, council members discussed the accounting for goodwill and observed that the information provided may not be decision useful for investors. The third topic was a brief session on current trends and changing business practices. During that session, council members provided observations on current geopolitical, economic, and regulatory trends, and whether there is a need for financial reporting improvements related to current disclosures about risks and uncertainties. At our upcoming FASAC meeting in September, we anticipate the topics will include a discussion of the FASB's agenda consultation research and the effects of use of technology on standard setting, as well as for terms beginning in January 2026 through our open nomination process. If you have any additional candidates you did not have a chance to share, we'd welcome any additional suggestion in the next couple of weeks. And I'd be happy to take any questions.
Thanks, Mike. Lynette?
Great. I just wanted to call out Mike on behalf of the Appointments Committee. Thank you for really looking very carefully at the FASAC appointments process, really helping the committee to make sure that all different perspectives and experiences are represented. And you have been an incredible partner for us during your tenure. So thank you very much.
Hear, hear.
Thank you.
Beth?
That's very much a team effort. So I want to give credit to the whole team on that front. So
Beth?
So this is more of a comment on the same issue. We just really appreciate all the work that you've done. I've had the opportunity, as have other trustees, to observe your meetings. Subject matter experts, you run a great meeting, and you really do contribute to the input to FASB and the standard setting process. So I just want to say thank you as well.
I appreciate that. Again, pretty easy to run a meeting given the quality of the people we have on that group and how passionately they care about the mission. So thank you.
A not unexpected, humble response from Mike Morrow. Thank you very much. So we'll turn to, if there are no more questions, we'll turn to Joel for the GASB report.
Thanks, Ed, and thanks, everybody. Great to see everybody. Happy to give an update of what we've had going on at the GASB for the second quarter. We did issue the implementation guide update for 2025, adding 16 new questions and answers to help our stakeholders implement our guidance, in particular focused on some of the more recent standards, such as statements 100, 101, and significantly 103 on the reporting model. The only other change in our technical plan is an item added to pre-agenda research, which really continues our theme of looking for and working on things that we think have the opportunity to significantly improve the financial report. And while that often results in, additions to GAP to provide users with new or better information for which the external financial report is the appropriate place for it to help with their decision making, and or filling in, a gap in GAP where a new type of transaction may not be covered very well by our current GAP. Another way in which the financial report could be significantly improved is to maybe remove requirements or simplify or reduce the complexity of certain requirements, but still satisfying all the user needs. So I think in light of doing that, one of the ways in which we've committed to do it is to review all the existing note disclosures through the lens of Concept Statement 7, which was the conceptual project we concluded in June of 2022 that really described for the board what characteristics an item of information should have for us to require it to be a note disclosure. We've been using that on all our existing or recent projects, but going back through all our previous note disclosure requirements and making sure they still rise to that level of essentiality, I think is a way in which potentially we could reduce burden unless users are still using all of that information, in which case we'll retain it. And so added to our pre-agenda research was obtaining Con 7 information on the existing pension and OPEB note disclosure requirements, certainly one of the biggest parts of the financial report for state and local governments. Additionally, during the second quarter, the comment period ended on our preliminary views document in our severe financial stress and probable dissolution disclosure project. We issued that PV at the end of the first quarter. The comment period of 90 plus days ended on June 30th, and the third quarter saw us begin to have a series of public forums to continue the dialogue and build on the dialogue we received from all the great comment letters we received with our various stakeholders. So we will look forward to continuing on getting input into that important project. And finally, like Rich, we're excited to work with Dahlia and Aaron, but wanted to thank Ed. Sounds like in November we'll have a chance to do that. But in particular, I thought this was John's last public meeting, but maybe he'll be with us in November. But thank Ed and John for their dedication to protecting the independence of standard setting and supporting us in achieving our mission at the GASB. So thank you both.
Thank you.
Happy to answer. That's my presentation. Happy to answer any questions. I see Manju.
Manju, go ahead.
Thank you, Joel. In your quest to always look for new ways of doing things and how to engage with stakeholders, I understand that GASB recently revised its format for the public forum meetings. Can you talk a little bit about that and what changed and how do you believe that new format is working?
Thanks, Manju. Yeah, the public forums that we started in the third quarter on the Severe Financial Stress Project were a bit of a different format. Previous to this, at the GASB, we would have what we called public hearings for preparers and auditors, where one group or individual would come before the board and talk for about 30 minutes and have dialogue about their thoughts. And then the next group would come in, and they were all kind of independent sessions with those individual preparers or auditors. We did have user forums, which were kind of a roundtable type discussion that involved different users, where they would dialogue about the issues with the board. But we decided to kind of merge those two into what we call public forums and have those roundtable type discussions with the board. And then each roundtable group will have 6 to 8 to 10 representatives that from all the different stakeholders. So we'll have some preparers, some auditors, and some users. I think on the 2 we've had so far, everybody thinks they've been really great. It's had a great dialogue among all the participants as well as the board. So I think the board is getting even better information about thoughts on the project and dialogue, and by seeing the interaction among the different types of stakeholders.
Yeah, it sounds like a great innovation. Tim.
Yeah, thank you. And I had the opportunity to attend your first one, and it was very engaging. Thank you.
Thanks, Manju.
Tim.
Thanks, Ed. And Joel, thanks for your report. It was great as usual. I was particularly interested to hear about your note disclosure project for 2 reasons. For one, I learned essentiality is a word, so I now have that in my repertoire. But additionally, just knowing how financially constrained many of your preparers are, I'm sure they're interested in this project. And I was also interested you picked something simple like pensions to start with. But I'm curious, Joel, any early indicators if you think this will move forward as an ongoing longer term project?
Yeah, thanks, Tim. I don't have any indicators if it will be, if this one will result in a standard setting project to remove them. I do think we will have future versions of this to be sure to go through all the existing note disclosure requirements in the same way. But our objective here isn't necessarily to remove disclosures, but it's to at least make sure that users are still using them. And that term, essentiality, in Con 7, we said means that a breadth or depth of users would use it to have a meaningful impact on their decision-making or accountability assessments. So that's what we're going out and doing. And we did start with a big one, right, on pension and OPEB. Are users using it in a meaningful way to impact their decision making? That's what we're going to try to determine if we want to make sure that, if we want to keep requiring governments to provide the information. But if users aren't using it in a meaningful way, then a standard setting project could be undertaken to potentially remove them.
Makes sense. Thanks, Joel.
Thanks. Any other questions for Joel? Oh, Marion. Oh, you're on mute. I think you're still on mute.
Apology there.
No worries.
Joel, can you comment on how preparers should consider materiality when they're implementing GASB statements or in the process of considering what statements should be implemented.
Certainly, Marion, that has been a topic we've been talking about recently. Every standard that we issue has what we call the materiality box. It says the provisions of the standard need not be applied to immaterial items. You know, in our experience, governments don't use that very well to their benefit and create efficiencies. They, for example, with leases will apply the standard to every lease they have, no matter how small. And certainly that adds to their cost without necessarily adding to the benefit the users receive, because kind of by definition, if you a small immaterial lease isn't impacting anybody's decision making, yet governments are spending time accounting for them. So our hope is that governments kind of learn more about materiality and how to use it. And I know that GFOA, we've talked to them in a good bit. They are spearheading an effort to try to educate their members and finance directors in particular how to use about materiality, what it is, and how to use it. So I think that's going to be really beneficial to improve the efficiency of government financial reporting.
Thank you.
Any other questions for Joel? If not, we'll next turn to our report from our Standard Setting Oversight Committee, Co-Chair Manju Ganeriwala.
Thank you, Ed. The Standard Setting Process Oversight Committee met virtually on Monday, August 18th. We received informational reports from FASB Chair Rich Jones, GASB Chair Joel Black, and as we do at each meeting, we discussed meeting observations from trustees who had the opportunity to observe various meetings during the past quarter. Yesterday, Trustee Rick Reisig and FASB liaison to PCC, Sue Cosper, shared their observations of the PCC meetings that took place on June 26th and 27th. In addition, we heard from Trustees Brett Bath and Beth Pierce on their observations of the FASAC meeting on June 5th, from Trustee Beth Pierce on her observations of the FASB meeting on June 18th, from Trustees Marion G., Beth Pierce, and myself on our observations of GASAC meeting on July 28th, and finally from Trustee Beth Pierce and again myself on our observations of the GASB Public Forum on July 29th, and I also attended the GASB meeting on July 30th. The committee and its participants held engaging and valuable discussions on several important topics for various stakeholders interested in viewing a recording of yesterday's public meeting. You can find this on our website, on the FAF website. With regards to the report received from GASB, Chair Joel Black and GASB Director Alan Skelton reviewed the main highlights of the past quarter. Many of these matters have already been covered in Joel's report. During this session, primary topics reviewed by the committee included a discussion on the current challenges facing the GASB, the issuance of the implementation guide update, the conclusion of comment periods of preliminary views, severe financial stress and probable dissolution disclosures, and finally, the GASB's robust schedule of conference engagements this year. With regards to the report received from the FASB, Chair Rich Jones and FASB Technical Director Jackson Day discussed the FASB's progress in the last quarter. Again, many of these matters have already been covered in FASB's Chair's report during this session. But primary topics reviewed by the committee included an educational session on the FASB's interactions with regulators and international standard setters, which consisted of a detailed overview of these key FASB relationships, an update on the progress made on the FASB's standard setting top priorities as per its July 22 agenda consultation, and finally, a discussion on the current challenges facing the FASB. And with that, I will turn things back to you, Ed.
Thanks, Manju. Any questions? I know a number of us were in those meetings. Okay, great. If not, we'll turn to John Auchincloss for the FAF Executive Director report.
Yeah, thank you, Ed. Ed has already announced some very important appointments that have resulted from the sterling work of our appointments committee. And in addition to offering my own congratulations to Dahlia and Aaron, also to Fred Can and Jackie Reck on their reappointments, I'd like to just briefly note that our appointments committee is continuing its hard work. So as many of you know, we are looking for replacements for 5 FAF trustees who will be departing at the end of the year. They are Tim Christian, Lynette Kelly, Rick Reisick, Sarah Smith, and Robin Washington. And as difficult as it is to replace any of those individuals, we are well on our way to identifying some sterling candidates. I will note that committee does have the flexibility to recommend fewer than 5 finalists, which, for example, it might do in part to balance the classes of FAF trustees. The committee is also searching for a new FASB member to replace Christine Bodasan, whose second term will conclude on June 30th of 2026. A new GASB member to replace GASB Vice Chair Jeff Praviti, whose second term will also conclude on June 30th of 2026. And finally, a search for a PCC member to replace Holly Nelson, whose term will conclude on December 31st of this year. So we are, as noted, making excellent progress on these searches, and we very much expect to be in a position to announce appointments on all of them in the November timeframe. That's my report, but I'd like to just add on a personal note, since this is actually my final public report as executive director, that I want to offer my deep thanks to the FAF trustees for affording me the opportunity to serve in this role, as well as my thanks to Rich and Joel and all of my internal colleagues and to our external stakeholders for making my tenure both challenging and fun. This is an extraordinary organization, and it's really been an honor for me to do my small part for it. As noted, this is not goodbye. I won't be leaving till the end of the year.
So John, we'll all reflect that deep thanks right back at you for all that you've done to serve this institution. And we'll look forward to both lauding you and maybe a little roasting of you in the November timeframe. So thanks for that. Any questions for John? Okay, great. That ends the public session of today's FAF Board of Trustees meeting. Thanks again to those who tuned into the broadcast. Let me remind everyone the next FAF Board of Trustees meeting will be held on Tuesday, December 18th in Norwalk, Connecticut. Thanks very much and have a great day.